Taking a look at the interest rate markets today, I want to focus on the 10-year note. Some selling pressure today. After yesterday's rally, we saw some further selling pressure today, and it pushed the 10-year note actually down to a 5-day closing low. We saw a 131.10 handle on the 10-year note here today, and again reversing some of this strength that we've seen over the last 5 days, and primarily due to, I think, to a couple factors as the market kind of unfolded today. We did see the equity markets reverse course on the hopes of at least some type of movement in the China-U.S. negotiations kicking off tomorrow. Now, those hopes were dashed a little bit late in the day as China indicated that they're not expecting to get as much done as they had hoped initially, but that narrative is going to continue to unfold. And currently, though, the trend is a little bit more positive in tone, and that's why we saw the equity markets bouncing back today, I believe, and the bond market coming under some selling pressure. And you look at the 10-year right around that 131.10 level, again, the lower end of the range for the last 5 days. And we also got to look at the Fed influence on the bond market today. A lot of Fed speak this week and continue today. Fed Chair Powell speaking once again today. The Fed minutes came out today. And again, the indications are that they want to remain accommodative. They're a little concerned about what the market expects as far as the continuation of the rate cuts, but at the same time, they still don't really understand the full magnitude of the fallout between the trade war between China and U.S., and therefore they want to remain accommodative. They also pointed to the inflation numbers. Again, that's another area where they're very focused, and when we got the PPI number yesterday, that was much weaker than expected. We have CPI tomorrow, so again, I think that CPI number is going to be very important. It's going to feed into the Fed analytics as far as how they're evaluating inflation moving forward. And they did say that based on the current situation, because inflation is so low, that gives them room, at least they feel it gives them room to cut further. And I think that's why you're seeing the market pricing in a big high probability of another cut here. We're seeing the CME Fed Watch tool pricing in a probability, 85% chance of another cut in the end of October. So as we continue to see the evolution of this trade situation unfold, the Fed really is being challenged because they really don't know the magnitude of how it's going to impact the economic structure, but they are starting to see some weakness, and it's concerning to them. And that's why I believe we're going to continue to see the Fed remain accommodative as we move towards that October meeting.